Howdy, folks. Welcome to Liberty Call. Today is Friday, February 9th, 2024. Hope we've had a fantastical day. Coming to you live from the DSA Financial headquarters here in Colorado. And this is Mission Control, right? Well, got a bunch of computer screens and stuff here, so feels like Mission Control. Anyways, but hope you're having a good day out there. It's kind of overcast here. We got some more snow on the horizon. We got a little bit this morning, more of just a dusting. And it's already melted off all the concrete and stuff. So, hasn't melted off my yard. It's still covered with snow. But, all the asphalt and all that stuff, you can, walk around without slipping all over the place. So, anyways, hope you're having a great day. Hope you're going to have a good weekend. The big game, we can't say the real word out loud or else you get in trouble on the interwebs. The big game's on Sunday. I really don't care either way. I'm not really a Chiefs fan or a Niners fan, so I'll probably, watch it. I don't watch halftime show or anything. I might watch the Puppy Bowl and see what else. I think the Cougars play tomorrow. Let's hope they don't get their butts kicked like they did up at Kansas last Saturday. They played much better during the week this week. But anyways, all right. Well, we're going to get into the news for the day, how the markets did. I got a couple articles about, people's opinion about, statistics and things like that. And then I got another podcast from Brian McClanahan. And this was one, I think it was either earlier this week or late last week, about Nikki Haley's comments about secession and such. So it's a good listen. So we'll get into that in a little bit. All right, well, let's go ahead and get into today's numbers and see how things turned out. Dow Jones was down 0.14%, 54 points, closed at 38,671. S&P 500 was up 0.56% at closed at 5025, so got over that 5,000 number finally. NASDAQ was up 1.25%, closed at 15,990. The VIX was up also today, which is a little odd since the S&P 500 was also up. The VIX was up 1.17% today. It's at 1294. Canada was up 0.43, Brazil down 0.21, and Mexico down 0.79. Our friends over in Europe, Germany was down 0.22%, the UK down 0.3%, France down 0.24%, the Netherlands up 0.95%, Spain down 0.09%, Italy up 0.3%, Switzerland down 0.42%, and Portugal up 0.22%. Russian exchanges again in the red, the MOEX down 0.22%, the RTSI down 0.46%. And the Asian markets, the Nikkei was up 0.18%, Australia up 0.07%, New Zealand up 0.16%. In China, the Shanghai was up 1.28%, the Shenzhen component up 1.29%, China A50. Oh, hang on. All these are closed. Let me just stop. They were not open today. So these were yesterday's numbers for the Shanghai and beyond. So, all right, well, we'll go ahead and just stop there. All righty. Well, let's go ahead and jump over to the see how the markets did for the week. There we go. Share screen. All righty. Let's start out with the Dow Jones. Looks like it finishes the week off up about 0.3%. So we had a big drop on Monday and then kind of built that back up over the rest of the week. The S&P 500, kind of a similar chart, but looks like it's going to have a better return. It was up about 1.35% for the week. The NASDAQ, it's going to finish off up about 2.31%. So that looks like the big winner as far as the major indexes. The Dow Transports up 2.72%. And the Dow Utilities is going to finish in the red, down 1.35%. So that is where things stand today. Let's get that off the screen. And let me put it back to my regular settings or else I'll be on Monday be like, what the hell am I looking at? All right. So close that. And let's go ahead and get over to the economic data that came out this week. It was a pretty light week on, data that came out. So it's going to be pretty quick here. Jobless claims or initial claims came in at 218,000. Forecast was 221. Last week's number was 227. Continuing claims came in at 1.817 million. Forecast was 1.878. Last week's number was 1.894, so looks like we dropped about 20,000 there. The U.S. Services Purchasing Managers Index came in at 52.5. Forecast was 52.9. Last month's number was a 51.4, so has been trending up. Anything above 50 shows expansion, which is good. So For the moment, this index is trending in a positive direction. The U.S. trade balance right now for this month came in at a deficit of $62.2 billion. Forecast was 62 even. Last month's number was a 61.9. So, pretty close to last month's number. We've been really since we peaked out at 107 billion in May of 22. We've kind of gotten back to the normal trend where we had been at for a number of years. So if we zoom out a little bit. It's not good. I don't want to, minimize it. It's not great. We've had 2 decades of severe trade imbalances. It's been bad since the 80s as far as being in a deficit, but it's just really expanded over the last 20 years. The U.S. Federal Reserve balance sheet came in at $7.631 trillion. And let's see here. Looks like it went up by $1 billion from the beginning of the month. And so it is shrinking. If you look at these numbers here, it has been going down, but it has slowed quite a bit. It's kind of flattening out right here. So, let's get it back to where it was before COVID, or, if we want to zoom out even further, let's get it back before the financial collapse back in 2008 and 9. So that'd be even better, getting the Fed's balance sheet under $1 trillion. I'd be all for that. All right, well, let's go ahead and move over to today's market recap and see what's going on there. Like I said, it was a light week as far as data. S&P 500 jumps above 5,000 level as tech bulls strengthen their grip. The S&P 500 surged above the 5,000 mark, fueled by a rally in tech stocks and encouraging inflation data. Big tech giants like Google, Apple, and Microsoft led the charge, with Microsoft poised to break a market capitalization record, driven by optimism around artificial intelligence. Chip stocks also contributed to the tech rally amid expectations of increased demand in the AI sector. Inflation remained in focus as revised U.S. Consumer Price Index data showed a steady annualized rate of 3.3% in the fourth quarter, signaling sustained easing in price pressures throughout the previous year. While these revisions are unlikely to alter the Federal Reserve's cautious stance on interest rates, strong economic indicators continue to keep the Fed vigilant. However, not all companies saw positive market reactions. PepsiCo revised its guidance downward due to weakening price power and volume pressures in the food and beverage sector, albeit with some positive outlook on earnings. Social media platform Pinterest and video game publisher Take-Two Interactive faced stock declines after missing revenue expectations and cutting annual bookings guidance, respectively. In contrast, Cloudflare experienced a significant surge of 21% following its upbeat fourth quarter results and optimistic guidance driven by new consumer acquisitions. Additionally, a bounce in Bitcoin prices propelled crypto-related stocks higher, with companies like Mara, Riot, and CleanSpark witnessing gains, further boosted by positive quarterly results. The rise in Bitcoin's popularity is evident as the BlackRock iShares Bitcoin Trust emerged as one of the top 5 ETFs of 2024 by inflows indicating growing investor interest in cryptocurrencies. Yeah, let's see, Bitcoin, it was on my screen somewhere. I think it was up to like 47,000 earlier today. So it's been jumping here of late, but be careful. Cryptos are dangerous, folks. So, they're a great store of value. And, if you need to move large sums of money from one place to the next, they work pretty good. But, yeah, what I do like about them is that, frankly, the Federal Reserve and central banks can't monkey with them. But, it still has some growing pains, I think, until it's fully incorporated into our financial system. All right, next up, article from Zero Hedge titled 2.7 trillion buys spectacular GDP. All right, the latest GDP numbers have dazzled analysts with a reported 3.3 annualized growth for the fourth quarter, surpassing expectations of 2%. However, behind the rosy figures lies a concerning reality fueled by a staggering 2.7 trillion government deficit. While this media lauds these numbers as shocking and stunning, the truth is observed by the massive debt burden shouldered by future generations. In the past year alone, the federal deficit has ballooned by 1.3 trillion, far outpacing the actual GDP growth, resulting in a net shrinkage of economic activity. Even the seemingly impressive Q4 figures reveal a troubling trend, with only $300 billion in additional GDP generated against a whopping $843 billion increase in federal debt. It's crucial to understand that GDP measures spending, not wealth creation. Government expenditure, often celebrated in mainstream narratives, does not equate to genuine prosperity, but rather signifies the dissipation or destruction of wealth. As government jobs proliferate, supported by deficit spending, the private sector contracts, exacerbating the problem. Despite these attempts to maintain the illusion of economic strength, a growing number of observers recognize the stark reality. Excessive government intervention erodes true wealth and productivity. The challenge ahead lies in confronting this unsustainable path and fostering a more sustainable economic future. Yeah, personally, I would just fire every government employee right now. I mean, every federal worker, you're fired. You know, that pension you're going to get, it's gone. We're broke. Sorry. You know, and any future federal employees, they don't get to vote. Sorry. You don't get to vote for people. You don't get to vote for your, people who are going to give you a raise or more jobs or all that stuff. It's just, I mean, I'm sorry. If and I know people say, well, that's not fair. Well, they're citizens. Well, I'm sorry. They're the help. I mean, does, like the people who come and mow your grass, do you give them a vote in things such as, household expenses or decisions? No, they mow your grass. That's all they do. So, I mean, a federal employee, I don't care if you're in the military or, we don't need the EPA or any of that stuff anyways. But if for some reason we have some of these government agencies, these people, again, should not be voting. They're the help. You're lower than the welfare recipient who's, getting help because they're, in a bad situation. I'm sorry, you're a drain on the economy, so you don't get a say. All right, one more article here. It's also from Zero Hedge, titled "Cisco to Fire Thousands, Adding to Firehose of Technology Layoffs Since the Beginning of 24." All right. The article discusses the pervasive optimism surrounding the integration of artificial intelligence, AI, and chatbots in the tech sector, juxtaposed against the stark reality of widespread job cuts occurring as a result of automation. Cisco, a prominent networking company, is highlighted as the latest major player in the industry to announce significant layoffs as part of a restructuring effort aimed at focusing on high-growth areas such as AI. In the tech sector, the tech sector has been swept up in fervor around AI, with many companies investing heavily in AI-driven technologies and solutions. However, amidst this enthusiasm, the article points out the overlooked consequence of job displacement and layoffs as automation increasingly replaces traditional roles. Cisco's decision to lay off thousands of employees underscores the broader trend of job cuts in the tech industry, which has already seen nearly 34,000 job losses in 2024 alone. Companies like Snap, DocuSign, Okta, and others have also announced workforce reductions, attributing them to economic factors and a strategic shift towards AI-focused talent. The juxtaposition of bullish sentiments regarding the future of AI and the reality of mass layoffs raises questions about the stability of the tech industry's growth trajectory. Despite claims of robust economic performance and falling unemployment, the article challenges the narrative by presenting a comprehensive list of recent layoffs across various sectors, including media, retail, finance, and technology. Furthermore, the article criticizes government statistics for failing to accurately reflect the true extent of job losses, implying that unofficial... Got a phone call. Where was I? Implying the official unemployment figures may be misleading or manipulated. The disparity between optimistic projections and the harsh reality of job cuts underscores the need for a more nuanced understanding of the economic implications of AI and automation. So, and actually, let me bring that back up. Here's a list of, I think, 22 companies that have reported layoffs. The highest is Twitch with 35% of its workforce, followed by Roomba with 31%, Hasbro 20% of their workforce, LA Times, which was in the news the other day, at 20%, Spotify at 17% of their workforce. And then down at the bottom, it's like Citigroup, 20,000 employees, Pixar, 1,300 employees, BlackRock, 3%. So, I mean, like Citigroup, that's a pretty big number, 20,000. But I mean, it's been, 25 years since I've worked for Citigroup, and really don't pay much attention to how many employees are still there. So that may be a small number or a big number. Again, Citigroup's a huge company, so I'm not sure how many thousands of his employees actually work there. All righty. Last up on the docket is, like I said, we're going to listen to a few minutes from the Brian McClanahan show. his episode 930, Nikki Haley talks Secession. So we'll go over here to my player so we can listen to this at a little faster speed. And go.
Welcome back to the Ron Planning Show by Democratic Program. Very glad to be here. All right. Nikki Haley can't decide what she thinks about anything. Think back to a couple of weeks ago. She was asked in New Hampshire, hey, what caused the war? And Nikki Haley supposedly stepped in. Again, all the boomer cons went nuts. All the West Coast Straussians, all the conservatives, and all the lefties, by the way. I mean, Joe Biden goes to South Carolina and says, we know what caused the war. It was slavery. And, of course, all of the conservatives supposedly start bloviating about this. Well, it was slavery. It had to be slavery. It was all slavery. I've talked about this on this show several times. In fact, I also went on Judge Napolitano's show, The Freedom File, talked about it. Nikki Haley exposed one of the real divisions in conservatism. It comes down to Abraham Lincoln. What was Abraham Lincoln doing in 1861 to 65? Well, he was saving the Union. I don't know, or at least that's what he said. He was actually not really even saving anything. He was revolutionizing America. Who pointed that out? Real conservatives at the time, real conservatives after the war, they pointed it all out. But of course, the Republican Party is conservative. This is one thing that I think, if you look at all the bad things Heather Cox Richardson is, and it's a question that was asked on my Patreon Q&A, which I answered there. If you're not a Patreon member, you would have gotten the long answer. But Heather Cox Richardson has been seen as innovative because she simply regurgitates what people were saying at the time. And people like me and other conservatives have been saying for years that the Republican Party was never really conservative. I mean, go figure. But Heather Cox Richardson is brilliant, because she went to Harvard and said these things that other people have been saying for over a century. But anyways, so we have a situation now where Nikki Haley can't decide if she thinks the war was about slavery or not, what the states' rights at the time were, what the interpretation of the Constitution was. She said, of course, many years ago that she believed states could secede from the Union. She doubled down on that. And of course, this threw the entire conservative establishment into a tizzy, because here Nikki Haley is saying states can leave. Now, she does say, well, I don't think they're going to do it. I don't think it's going to happen. But states can do it. Now, in some ways, if she firmly believes that, that's the person you want in office if secession ever does come. Now, Nikki Haley is bad on all kinds of things, but that's the person. A person with that kind of attitude is someone you want in office if there ever is a situation when a state seeks self-determination. When the people of a state decide they no longer want to be part of the United States. Doesn't matter if they're on the left or the right, because this is a fundamental principle of America, right? It's self-determination. And we know from all the debates, the founding generation certainly thought this was possible. They wanted to prevent it, which is why they signed on to the Constitution, not because the Constitution prevented secession, but because they thought a union was better than Virginia going its own way. And they thought that union was preferable to disunion, right? So that's the whole point. This is, Elizabeth Varyn, for all of her bad stuff, wrote a book entitled Disunion, where she went in and said, look, one of the great fears throughout American history was disunion, because they thought disunion was going to be dangerous. But by simply fearing disunion, what are you saying? It's possible. It's not illegal. It's possible. This is where people don't really understand American constitutionalism, particularly on the right, and it's dangerous. There's two things we're going to cover in this particular show today. First is a New York Post article, which gets into Nikki Haley's comments, and then Bill O'Reilly's response to it, which is one of the funniest things I've ever seen in my entire life. We're going to play the clip, and then I'm going to address it. Okay, so it's really funny, and you're going to laugh out loud, because Bill O'Reilly shows how stupid he really is. Okay, now
I'll agree with that. Bill O'Reilly can be a moron. I'm kind of sad that I used to listen to him on a regular basis, but yeah, he's a boomer con, and he doesn't really know jack squat about constitutionality or anything like that. So yeah, it's illegal to secede. Wrong. It doesn't say it anywhere in the Constitution that it's illegal to secede. So if it doesn't say it, the states are allowed to do it, and that's just the way it is. So, and the Constitution's a pretty easy read. I mean, I've read it a number of times, especially when I'm looking up something to, I've gone back a number. I even have an app on my phones that, you go through all the articles and you can read through it. So anyways, all right. Well, that's everything I had for today. Good stuff, wasn't it? Yay! Went a little long, but Brian's podcast is a good thing to listen to. He's got 930 episodes. So, and I've listened to almost all of them over the years. So they're usually about a half hour. So if you turn the speed up to 1.5, I had this one at 1.3, you can really get through his stuff pretty quick. And a great history lesson. So plus he's got his own academy where he does lectures and has a curriculum. So good stuff. I can't recommend him enough. I have learned more about U.S. history from him than just about anyone else in the world. And I mean, I'll be 50 next week. So, I'd put him as far as one of my top history educators out there in America today. So anyways, all right. Well, that's everything that I had for today. If anyone needs anything from me, here, go to dsafinancialgroup.com. All my contact information's there. I hope everyone out there has a wonderful weekend. Get some fun, get some sunshine, have some fun. I'm probably gonna be doing some chores around the house, playing here with my boy Jake, and that's about it. So hope everyone has a good weekend, and I'll talk to you next time. Adios.